Well, good day, traders. Chris Weston here, Head of Research at Pepperstone. Just giving you a quick brief update on what's happening around the Asian session as we head into the European Open. And you can see across the price table straight away, there's when you're looking at the opening calls for both the DAX and the FTSE, down a touch. We've got the DAX down 29 points at the moment. We've got Asian equity markets under a little bit of pressure. The ASX 200 down 32 points at the moment. There's a little bit of a little bit of offer coming through in Japan, Hong Kong and China as well. And I think that's sort of just been keeping those opening calls for Europe fairly suppressed. I think the interesting one there is that we are seeing better life coming back into US markets. Now that's interesting because since Nancy Pelosi came out and announced that she was leading this formal investigation or inquiry into the impeachment of Donald Trump based on the news flow we've been seeing, involving Donald Trump and Joe Biden and obviously what's been happening in the Ukraine situation, markets are up a little bit there. So that tells me that markets are not, whilst they see an elevated risk of impeachment from Donald Trump, that if it does get passed through to the Senate, given the makeup of the Senate with 53 seats being held by Republicans, that we'd need at least 20 Republicans to vote against their presidency to see this one being passed, and therefore obviously Donald Trump being stood down as president of the United States. The market's saying there's a very low chance of that happening, if any. If you genuinely believe that Donald Trump was going to get stood down because this passed through the Senate, you wouldn't be seeing the S&P at 29.74. You wouldn't be seeing the 2-year US Treasury trading 160. You wouldn't be seeing dollar yen, as you can see here, 107.36. I would say that'd be down closer towards 105, and the Bank of Japan would be making noises about flooding the world with Japanese yen to try and push that back up again. And I think that would lead us to belief of currency wars. That's not the case. I mean, the fact that gold is trading at 15.28 tells you the market's not overly concerned about this story. The other issue, of course, is what's happening in the Supreme Court in the UK. We've all been focused on that very closely. The pound's been fairly well bid on this situation. I believe that people will be buying any kind of pullbacks at the moment. But you can see that they trade up to 125.03. Trading sitting down at 124.70 at the moment through Asian trade. So a little bit of profit taking. And as you can see here from a sort of longer term daily chart, there has been a strong bid there. It's obviously gone from 119.59 up to 125.82. It's settled down, and we're just seeing a bit of consolidation in price. But my base case with Brexit still remains that we're going to see a general election. We're probably likely to see an extension being formally requested, probably after the EU summit, that probably sometime around sort of just after the 18th of October. I think that October to 18th to 21st window is going to be a very volatile one for the pound, and you can see now from 1 month implied vol in cable that's been suddenly elevated. People are expecting outside ranges. That remains the poster child of volatility in FX markets at the moment. We've seen a bit of flow coming through in the Kiwi dollar. That's been somewhat better bid. Currently sitting up 20 points at the moment, 63.45. The RBNZ came out midday in Asian time zone, and they refrained from cutting rates. Not many people were really expecting. I think there was about a 10% chance that we were going to see a rate cut. If you go back to Mr. Orr's speech that he gave at Jackson Hole Symposium, he talked about if the need to cut rates, they'd be looking to do so in November. He was very explicit there. Therefore, people had certainly been looking at that guidance and had no real inclining to believe that we were going to get a rate cut there. But if you actually look at the statement, he has said that more monetary policy easing will be required if necessary. It doesn't really reek of any kind of hard-hitting evidence that they're going to cut again. It doesn't give that urgency that the market was necessarily looking for. And there has been a little bit of a bid coming through in the Kiwi dollar. If you have a look at the pricing table that I've put together here, you can see what's being priced in for the next rate cut or the next rate meeting. You can see the RBA now 71% chance that we get a rate cut at the next meeting. Then that was somewhat massaged a little bit by the comments we heard overnight from RBA Governor Lowe. He's looking somewhat more favourably at the domestic economy, but it's the external factors that make him want to look to ease rates again. It's the fact that he wants to keep the currency very much in check. That's very much a sell on rallies kind of candidate, given that the central bank there wants a weaker currency, or at least wants to contain the kind of moves we're seeing. The Fed, there's a 57% chance we get another rate cut coming through from the Federal Reserve on the 30th of October. Interesting one there, you've got the ECB, the market's pricing in a slight probability of a hike. Have we reached the lower bounds in terms of what's happening there? That should support the euro, despite this plethora of very, very poor data coming through that region. You can see there, the RBN said the next central bank meeting these guys have will be on the 13th of November. There's an 80% chance of a rate cut coming through there. So that's probably fully priced. It makes me believe that if you are looking at central bank policy, I think the emergence that we're seeing is this slight distortion now between what's happening with the RBA and RBNZ. We know that the RBNZ can be punchy with their rate cuts, but I think they're getting to the point now where perhaps they're slowing down a little bit now. That suggests to me that you could see some further downside in Aussie Kiwi. That's one that we're watching at the moment. That's one I put in my daily fix report there as well. Aside from that, you can see a little bit of selling in gold. Oil prices down a touch there. You've got a little bit of a bid coming through in dollar yen, but that's a reflection of the slight higher move we've got there in Wall Street cash and also the S&P there. Looking forwards, there's not really a huge amount for people to focus on in terms of economic data. There's a few different central bank speakers, but I think most of them are refraining from talking about monetary policy. It's more about payment systems and things around the banking industry. I wouldn't be expecting too much volatility from that. Be aware that Donald Trump is giving a press conference at 4 p.m. local time. So given all the news that we've been seeing there in the front page that's having at the moment, that would be something to look forward to as well. So fairly sanguine conditions, a little bit of an offer coming through in these Asian markets. Obviously a reflection of the news flow we've been seeing mostly from the US session there.